Well, structuring the deal, it's so important so that the investors say, yes, Vinny, I want to get in there. I want to be a part of this beautiful diamond in the rough that you have found, this C class property or C plus in a good area, maybe C plus area or B minus area. You might understand all this, as you will get more and more into it. The key thing is, the investors are always looking for good deals. And if you put together a good network of brokers and you find the deal, you underwrote it, now the investors say, okay, how are you going to make it attractive for them? See, I tell the investors, we give majority of the profits of the cash flow and the equity gain to our investors, which is true. Our limited partner investors, they are equity investors, and they get 70 to 80% of the profits. What? 70 to 80. We do the work. We get 20 and 30%, but that's a pretty big chunk also. But then we give to the investors this 70% of the cash flow. First, we give them up to a pref rate, we call it. What does that mean? Pref rate is like, okay, we'll give you 7% pref rate. In other words, if the property is doing only 5% first year, and then as we do value add and things like that, then you'll be able to increase the value, the rents and all that. Now the property is performing better as we take over. Or if the delinquency is there, we reduce the delinquency. Concessions are there, we burn the concessions, we value add. All those good things happen, right? Because that's the business plan. And then now we are giving majority of the cash flow to the investors and then the equity gain also. So we can make terms so attractive for the investors that they will just say flock around you. That's what has happened in my case, from one investor to 530 investors. And they are always emailing me and texting me, Vinny, when is the next deal coming? When is the next deal coming? And that will happen for you also, I promise you. Because as you start building from 1, 2, 5, 10, 15 investors, and you start giving them the cash flow, and you could structure it to give them pref rate and equity gain. And IRR is another term that the investors like to know. What IRR? It's the internal rate of return. It's the time value of money. When you're taking money from the investors, when you're giving them cash flows every quarter back, and then the principal you're giving in 3 to 5 years as you sell the property. Or if you want to keep it longer, many investors like to just stay on for 7 years, 10 years. Why not? Because if they're getting all the cash flow and the property is increasing value. So we really make in syndication, our investors are big winners. And that's why it's so wonderful to be in a serving mind and attitude and taking care of their investment as a good steward. And that's what syndication is. It's a watchdog, SEC ruling, Securities and Exchange Commission in USA. It protects the investors and frank integrity, the transparency, everything comes with the syndication's role so that everybody is a win-win-win-win situation. Our investors win, our residents win. I always say residents, our team members win because they are over there at the property representing us. And then the contractors win. And then fourth, our families win with the, of course, investors are on the top. We are at the bottom, and we are able to also win. Our families win with all the, returns that we get by being a syndicator. So good luck to you. You will have a lot of good stuff as we talk more about it.